Hey, welcome back. We will look at Foot Locker again today. We'll give you a stock update. We'll look at the financials of Foot Locker. We're going to crack open the 10K and show you how we would invest in a company like this. We'll show you an appropriate stock price you should be paying using our stock analyzer tool. And if you want to trade Foot Locker at a quicker pace, we will head over to Mo and he will show you all the charts and trends. But first, why should you watch this video? I bring your questions about this online giant Foot Locker to a couple guys who maintain portfolios of over $100 million in real estate, multiple businesses, and stocks, and they will help us guide our way through if you're looking to invest in a company like this. Paul, we've invested in Foot Locker in the past. We've loved Foot Locker. What are your current thoughts on this thing?
All right, guys. First off, follow us on Instagram, Everything Money Investing, and also follow our personal account so that we can not feel left out. So here's our Everything Money software. We're going to go to our 8 pillars tools. We're going to type in Foot Locker. Okay, so guys, Foot Locker. Let's look at the max chart for Foot Locker. 1988, it was a $30, $28 stock. It's currently a $56 stock. So 30 some years later, it's only doubled in price. Foot Locker, I'm pretty sure anybody in this watching this video who's over the age of 35 has bought lots of stuff from Foot Locker, right?
Yeah, we have video evidence of Paul earlier in life. He'll get the Black Friday where he storms Foot Locker to get the new Jordans. And he's just climbing over a sea of people. You've done that.
I have done that. I just go for the undercarriage. I yank and I get my,
just to
my
get those
shoes that I
shoes.
want. Did I say undercarriage?
You did.
So, Foot Locker stock. This is a company I actually liked a lot last year, and I was selling puts on it. And for those who don't know what that is, selling puts is I sold somebody the right to force me to buy the stock at a certain price because I was hoping it would fall and I'd be able to buy it at those low prices. So I did that. The stock went, as you can tell from right here, the stock just said, we're just gonna go straight up from here. I was like, okay, well, I didn't get those shares. But either way, Foot Locker, $6 billion company, market cap. First pillar, we want the 5-year PE to be under 22.5. It's half that, 11.3. The 1-year PE is 5.8. Now keep in mind, guys, I'm sure there was a lot of pent-up demand in this 1-year PE, and their sales probably skyrocketed because of COVID shutdown, and all of a sudden people got to go to stores again. So let's look at that when we look at the income statement. Pillar number 2, you want the 5-year return on invested capital to be over 9%. Right here in our trusty software, it's 11.4%, check mark. So we have 2 check marks to start. We have an adorable dividend, 1.2%. But there's some news on Foot Locker. They just declared a 30-cent per quarter dividend. That'd be $1.20 per year. And the stock is at $57. So somebody do the math for me on that one. That's about a 2% dividend yield. So the dividend yield is going up from here, okay? They pay out $73 million in dividends. Everybody needs to remember, dividends aren't always safe. You have to compare your dividends to your free cash flow. Because free cash flow is used, part of it is used to pay dividends, and their free cash flow last year was $700 million. The last 5 years, it's averaged $636 million. So they have plenty of free cash flow to pay that dividend. Plenty. So I'm not worried about that. All right, pillar number 3. What's pillar number 3, Seth?
Revenue growth over the past 5 years. How are they doing?
So what would you think based on a retail store?
You know, you previed me with the notes you made on this company of like, why is this company still around? When I drive past like Dick's Sporting Goods, I wonder the same thing because even if I want something from Dick's,
you don't love Dick's?
Well, at times, but I'll just go home and buy it from Amazon, or I'll buy it at Amazon while I'm waiting in Chick-fil-A, looking at Dick's Sporting Goods. You know, like so. This is, but I would say with shoes. Tell me, I don't know. I have
no idea either. So guys, we go to the income statement on our software.
It's got to be slowing down.
I have to think so as well. 7.7 billion to 8.7 billion, check mark. But keep in mind, 7.7, 7.89, 7.98, 7.4, but this was during partial shutdown right here, right? Because this is the 12 months ended July 2020. We had a shutdown for 3 of those months. So one of the things we want to look at, and I'm going to just interject real quick, when you're doing more research on this company with our software, you can scroll down here and go to annual reports and annual reports. Name that movie.
Something like Dumb and Dumber or something?
It is Dumb and Dumber.
Thank you.
You click on 10K, and you click on the most recent 10K right here. What I want you to do is I want you to look, and we're going to look at it before, Mo could look at it while I'm doing this stuff. We're going to look at comparable store sales. When it comes to retail, you want to look at comparable store sales. Why? because you want to make sure the stores that have been open for 12 or 18 months or longer are still increasing the number of shares. Because a retail store chain can just put up a ton more stores and show revenue growth, but if every store that's open isn't still growing, you've got a problem. So, the income statement, we have a check mark on revenue growth.
Yeah, pillar number 4. Yeah, profit growth, Paul. Pillar number 4.
5 years ago, 577. Last year, $1 billion. Check mark there. This is a very random year, though. I mean, look at this. In the last 10 years, they've never made anywhere close to $1 billion. Right? They made $1 billion last year, COVID related. Everybody got out. Everybody got their checks. Everybody went to the store and bought their kick-ass Kevin Durant's. By the way, FYI, I've sprained my ankle twice in my life. Twice. Both times wearing Kevin Durant shoes. Playing basketball. That's it. Only twice in my life I sprained my ankles, and both times I played basketball in Kevin Durant shoes twice.
Were they low tops?
Yeah, they're the low tops.
My brother-in-law just tore his Achilles in a low top.
Kevin Durant, I'm coming for you.
Yep, I would. Pillar number, what are we doing? 5?
Pillar number 5.
Shares outstanding, Paul.
Yes. Shares outstanding, guys. We want to make sure the shares are decreasing, especially for an inexpensive company like this, only selling for 11 times earnings over the last 5 years. So we go to the bottom of the income statement. 131 million shares, and the average basic shares outstanding down to 103.
Check, please.
10 years ago, they had 150 million shares.
This is good news for us.
This is good news. They are giving you a bigger and bigger piece of the company. So even if the company is shrinking in size, you are, as long as they're buying their shares back at a higher rate and their multiple is low, a 5-year P of 11, you can make a lot of money off this. Okay? This is a good thing. I love it. Pillar number 6. Has to do with our long-term liabilities.
Yeah, their debt. Go ahead.
So we go to the main page. We go to our 5-year average free cash flow. We multiply it by 5. So it's 640 million times 5 is $3.2 billion. So we want their long-term liabilities to be under 3.2. I have concern about this because Foot Locker has locations that are all leased, and the capital leases are part of their long-term debt. I don't necessarily include that in there. The software does, but this is part of what you're trying to learn here is how to factor in certain attributes of the software. Does that make sense, Seth?
Yeah, I mean, sometimes when we do the stock analyzer tool, I wonder if some of these numbers are industry specific because this company doesn't have any
absolutely
brick and mortar stores.
And that's why we have the channel, because the software only takes you so far. Then you have to use your own knowledge and expertise and learning to decide what attributes of different companies you put into different emphasis on the stock analyzer tool. Mo, did you find out anything about the comparable store sales?
Yeah, it's not good. Minus 19.3%.
Dun, dun,
when?
dun.
Oh, for 2020 though. Well, that was because of COVID.
If you look, here's the chart for over the period. Same store sales were down 19.3%, 8.5, but you can see it's decreasing. Even 2019 was.
What's the numbers on
1.6%.
2021 though?
They're not out yet.
They didn't issue their. Oh, darn.
Not out yet.
It's going to be a big number up.
I mean, I could look at. Do you want me to look at the 10Q? See if I can find it.
Yeah, let's see if you can find anything there.
Sure.
Okay. So guys, we go to the balance sheet. Remember, we want $3.2 billion or lower. We go to the balance sheet, scroll to the bottom. Oh, wow. Total long-term liabilities, 2.6.
Huh.
Check mark there.
Chickadee check.
Chickadee
Check,
check.
please.
Chickadee check. Okay, pillar number 7, free cash flow. Seth, take it away.
Yeah, free cash flow is cash from operations minus capital expenditures. This is the lifeblood of a company, as Paul would say. They can buy back shares with it. They can issue a dividend. They can reinvest themselves. They can pay down debt. And they can make acquisitions, Paul. You know all of this. I don't have to tell you that.
Cash flow is what I look at because earnings can be manipulated and changed based on SEC rules, accounting rules, shady CFOs. You can still manipulate free cash flow, but it's a lot harder. So we go to the free cash flow statement on our exclusive software. We scroll a little bit. We see cash from operations, less capital expenditures. And your Uncle Paul,
In his grand wisdom.
who wants you to sit in his lap, added this line.
Age appropriately, of course, Paul.
Yes, age appropriately.
Just for a picture. Fully
Like
clothed.
like
I could have
Santa.
said something way worse,
Like
FYI.
Santa. Well, of course.
We look at the free cash flow right here. We added this line here for everybody.
I mean, there are women in the live studio audience, Paul. So, I mean.
Oh, yeah, that's right.
have to hone
I
it back a bit.
apologize. Oh, boy. I thought I was the only female in this room. So 425 to 695. That's a check mark there. You know, I like that it's a lot more consistent than the earnings statement. That's what I like. We got a lot more consistency here. So either way, we have a check mark. Our final metric is we take the 5-year average free cash flow, we multiply it by 20, as a way to get some sort of starting value for the company. What do we want to pay for this company? So 636 million times 20 is roughly $12.8 billion. We want a market cap under 12.8. What's the real market cap?
6 billion. Am I crazy?
Yep, 6 billion.
Oh
All
my
right.
gosh.
So what does this mean, guys? Does this mean we buy it?
I am. Fidelity.org. Carry
It
the
might
two.
be, but that's how we have. So first off, I'm going to show you guys the 8 pillars tab, because if you didn't like all that math,
I didn't.
this 8 pillar tab does it all for you. And guess what, guys? This is an 8 pillar thriller.
Check, please.
Got all 8 pillars, guys. So does that mean you just buy it? No. It means it's a great thing to go look at and start answering the questions. If Foot Locker was going to go out of business tomorrow, and this has happened before, where companies can be 8 pillars and not be bought, you still have to understand, like, what are the things that cause concern for you besides, don't look at the 19%. Did you find out the quarterly one?
They're up 28.5% this year, so they're back.
They're back, baby. That's honed in all of your hesitations.
So
Mo?
we have a group chat where everybody says, you're back, they're back. It's like the common statement. It's like,
Oh, okay.
Tiger Woods breaks his ankle, he's back. It's like, wait, how is he back? He just broke his ankle. I mean, things like this. So
I'm not in that chat. That's
you're not
nice.
in that chat.
That's nice.
I don't think you can't even handle one chat from
Yeah, I
me.
don't think
One
you-
text
I
from
don't
me.
think you do
You'll
well
handle that
there.
one. What was that?
I don't think you do well in there for 200 messages per minute.
I'm not even in that chat anymore. I'm the instigator. I kick people out. I kick myself out. It's just great. Anyways, so what we're gonna do now is we're gonna use our stock analyzer tool, because guys, if you've watched more than one video from us, you've heard this statement 8,000 times. Every investment is the present value of all future cash flow. Okay, we don't know the future. We want to make assumptions about the future. When we make those assumptions, it'll tell us things about what we believe the company is going to happen. Okay. Charlie Munger and Warren Buffett always say they don't invest in a company unless they can reasonably assess what it's going to do in the next 5 or 10 years in terms of revenue and profit. So we have to make these assumptions, and our goal is to look at 10,000. There's 10,000 companies out there to invest in. We want to find 20 to 40 that are selling below what our assumptions tell us we should pay for the company. So let's start with it. So Foot Locker here. I actually think Foot Locker is an acquisition idea.
I do too, and I think it's going to be. Dick's and Nike just came up with some partnership for exclusive shoes that they're going to sell only. Nike's only going to sell those shoes at Dick's stores. So I think that this is going to be like Amazon's going to come in and do something.
Well,
with
that's
that.
what I've said before. Amazon buying Foot Locker,
Yeah.
because they bought Zappos 12 years ago, and that's online shoes. But Amazon's starting to get more into retail now to make it easier for people to come in, return things. And I just look at it saying,
They're doing exclusive stuff now.
Nike is doing exclusive.
This is the next,
exclusive
Paul.
stuff at
This is the
Dick's.
next level of marketing for companies I'm seeing. Is this with NFTs and exclusivity? People are willing to pay more for this. I love my Magic the Gathering cards. They're starting to number these cards and then just increase demand. What do you think about all that?
so for shoes, you mean?
Yeah, because the shoe game's huge nowadays. People are
Absolutely
just,
huge.
they're buying them. They're putting them in plastic. They spin them on these. It's like a whole thing. You should just wear them.
Under Armour has already gone exclusive with Dick's on like the Project Rock line. They have like exclusive Project Rock stuff at Dick's Sporting Goods only. So a lot of that's to your point, acquisition.
I just think it's
Crazy-
such a cheap
crazy
company
partnership.
that a company like Amazon could come in and say, hey, we're going to sell a lot of stuff through you, and then almost make it like a return place. And guess what? Malls would love that.
Kohl's did.
Kohl's did the same thing. Malls would love it if the Amazon came in and started buying companies where a lot of people would come in and return things to their Amazon locker. Like, okay, Foot Locker's got their Amazon locker. Wouldn't that be a great little marketing ploy? Right?
not
So
only-
anyhow, so
Oh man.
let's do some revenue numbers. Go ahead, Uncle Mo. Revenue assumptions.
2, 3, 4.
2, 3, 4. Profit margin.
3, 4, 5.
Ooh, too low.
You think
Mo, too low.
they're going to start producing? If they're going to keep producing stuff,
Who's producing anything? Foot Locker's not producing shit.
you got to buy it.
Yeah, there's
What
no
do you want to put
production.
it at? 4, 5, 6?
I think it's very consistently in the 6 range. I think,
4, 5, 6 then.
okay, I still think that's low, but fine.
What do you think?
I think
5, 6,
5.5, 6, 6.5.
I'll indulge you.
Potato here.
Let's do 4, 5, 6. Free
Then we'll
cash
ch-
flow
then we'll
margin.
change
Do you want to do negative free cash flow now? Is that what you're trying to tell me?
Yeah, -8, -7, -6.
Usually I'm the conservative one. Here's Mo like, let's declare bankruptcy tomorrow.
Well, yes.
Okay, free cash flow margin. Mo, give me a.
7, 8, 9.
Why'd you go to 9?
Why not?
Because there's no 9 in there. Like there's. Why
Well, you said it's going to increase. So
why do you have
let's
profit margin?
Let's say it's higher.
But why do you have profit margin decreasing but free cash flow increasing?
I don't.
This is why I've removed myself.
But here's the deal, like
I understand what you're saying.
it's counterintuitive. You're saying, hey, earnings are going to decrease, profit margin is going to decrease, but their free cash flow is going to increase. It's like, how does that work? Am I calling you out on something that I shouldn't?
No, you're not.
I want to be consistent.
I just don't. I mean, Foot Locker, if they don't get traffic in their stores, it's a dying shoe store.
Well, revenue is not showing that.
Revenue is not showing that, but you still need to get look at their same store sales. It was decreasing. Let's take out 2020. Let's take out 2020 and 2021.
No, same stores. No.
With the chart that I showed you.
Same store sales growth was decreasing. They only had 1 year of negative same store sales change.
What year?
I don't include COVID. Before
I'm not including. I'm talking up to 2019.
That's my point. Like I'm not looking. I still think Foot Locker.
The issue that I'm thinking of, it's because malls. That's what I'm concerned about.
But
traffic
again,
in malls.
I get that, but you went on a higher free cash flow number, but you decreased the profit margin. That's why I'm sitting there saying, wait a second, we got to be consistent here. How can you have a higher free cash flow number even though profit margin you had is decreasing? Do you feel what I'm saying?
Yeah, I understand. Okay, make it lower then.
I did 5.5, 6, 6.5.
That's fine.
That's still significantly lower than free cash flow margin. PE, give me a PE, brother.
12, 13, 14. Somewhere in that range. I can't imagine that it's going to be much higher to be warranted.
Okay. I'll do the same thing for free cash flow and 12.5% return. Why 12.5%? Guys, if you're buying an individual stock, one, you need margin of safety, so the higher desired return gives you a lower price. And two, you can go invest in an ETF and get 9 or 10%. So if you're going to go buy an individual stock, make it worth your while. Okay. We hit the analyze button as our software gets updated. Sick.
Great.
Oh, good. It's saved. Our software saved it.
We have a history.
Analyze. $57 price. Okay. So we have a low of between 35 and 48 and a high of 65 to 70 with an average of right where we're at, 48 to 58.
So you can get a 12.5% return with these assumptions.
With these assumptions, at the middle level, you can get a 12.5% return.
Did you do 10-year on this?
I did 10-year.
What price would you sell puts at on this stock if it was you to get assigned shares?
To get assigned shares, $50.
Okay. Yeah, I was thinking
$50. If I wanted these shares, I'm selling puts right now. One month puts at $50. If I want these shares. And guess what? It's on the low end of the middle range. And that's where I personally try to focus on this middle range area. So, and I look at these numbers. I still think we were conservative in the numbers above. I still think this is a buy. Now, the reason I want to cry is I wanted at 20, 22, and I was selling puts at 15 a year ago. And now I'm like, oh, I didn't get any shares.
Why don't you put in the numbers that you want to put in? I want to see what the value comes out to be.
Probably not much different. Profit margin,
much.
I'm going to do 5.5, 6, 6.5. Free cash flow margin, I'm going to do 6.5, 7, 7.5. Let's go 6, 6.5, and 7. PE, I actually was going to go lower on the high end, but that's okay.
What is it?
All right. It's a low of 50, 70. A high of low 70s, and a mid area of 60.
All right.
So if you believe Foot Locker's going to be around for 10 years, and you believe they can do 2 to 4% revenue growth a year, and you believe everything else we said, lower margin, et cetera, you can buy it today. And it's a buy today. If you believe all these assumptions. Now, go ahead.
If you want this software behind Paul, you can join our community. You can talk about this, and Paul will tell you right now how to get that.
So guys, we created the software because our users kept asking for us to do analysis on companies. They want to do their own analysis instead of waiting for us. So we created the software. You get everything you see here, everything you saw in the video, everything that's coming soon, and you also get it all on your mobile phone through Android and what's the other company?
Apple
through iOS. So you get all that. You get exclusive daily content, 2 or 3 videos per day that we send to you guys. That's exclusive just to our Everything Money subscribers. You get access to Seth, Mo, and I. You get 30 years of financial data. But most importantly, one of the biggest things we got is most people felt like they were alone. Like, we have a very, very different view of the world. And if you do too, you probably don't have many friends around you can talk to about it. This is over 6,000 people currently in our chat from all over the world where you can discuss all of your financial ideas, your investment ideas, even crypto. The people are in there talking about crypto. You get all of this for only 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year. This would lead to hundreds of thousands, if not millions of dollars in extra gains in your lifetime for only 90 cents per day. Less than a cup of coffee. It's a no-brainer, guys. 90 cents a day, and your price is locked in. 2 ways to sign up: Everything Money or Patreon. The benefit of everythingmoney.com directly is we are not big enough to charge sales tax yet, so you'll save on the sales tax for quite a while. 90 cents a day, go sign up.
And let's go back over to Mo. Mo, are people trading Foot Locker at a quicker pace? Show us the charts.
So Foot Locker is an interesting one. It actually does get quite a bit of movement. So right now, it is coming up to that sweet spot level. Now, where was the previous high? Okay, so we're up here, 64 and 60. So it does have room to run. I mean, pay attention to earnings, whenever that is. It looks like it's today or something. But let this thing get into the sweet spot. Let red line and yellow line get into the sweet spot. Wait for 3 days confirmation. That means that your red line and yellow stay in the sweet spot for 3 days. Then you can go ahead and make your purchase. So you just want confirmation.
I get too antsy, Mo. I see a couple
That's
of candlesticks
the problem.
and I get after
you know
it.
what? Let me find something. Let's see if I could find it on here. Okay.
How far
Well,
out you
this
going?
isn't a great stock to look at, but here's what happens. Somebody will the red line, I'm going to use green. Red line will get here, yellow line will get here, and then you get so excited and you buy.
That's me.
And next thing you know, this happens. And you go, well, the rules didn't work. Well, you didn't wait for confirmation. You just jumped in way too soon. So part of the rules is when you're going for a long-term trade, let your red line and green line get in the sweet spot. Wait for 3 days, miss out on some gains, and then go ahead and do it. And because remember, Seth, we're playing probabilities here. You want a higher probability that you're gonna make money on this. So that's what that'll do. This thing has been running for a very long time from a swing trading perspective, all-time high. See what happens on earnings tomorrow. If it jumps up here, keep going with it. This is a great looking stock. And if it doesn't, come down and short it right past the 100-day moving average. I think that'll happen too. Now let's see if you can day trade this. You can. Right now you can day trade it. Let's see if we can zoom in here.
Boy, it's hopping today.
It's hopping. It's doing exactly what the rules dictate. You have very good volume coming in. You're over 80% on your stochastic. You're getting great engulfing candlesticks, and you're making money right now. The way that you would sell, you'd wait until this red line drops below 80%, exit your position, move on, take your cash, pay your taxes.
Bada bing, bada boom. If people want to join you in the bid and ask, how can they?
Come and join me in the Bid and Ask Nation. $79 a month right now. It's only going up. You get access to the Trading 101 series, which will explain everything that I just said to you in the specific rules, just like the rules that I was teaching Seth. You get access to the Employed Trader series, my monthly seminars, and the Discord community of 900 plus people.
That's our take on Foot Locker. If the show doesn't work out, I will be wearing the ref outfit. I'll be at Summit Mall in Akron selling shoes, and I'll see you there. But if not, if the show does well, you can fondle that thumbs up to help. I will see you in the next video. Stay tuned. Stay tuned.